Now, I personally am always looking for higher than average income opportunities when it comes to investing into different stocks and ETFs in the markets. Now, this is because one of my main goals right now as a 31-year-old dividend investor is to get my total yearly and monthly dividend income up to a point to where it can not only cover all my expenses, but and then some, within hopefully the next few years. Because at that point, if I want, I can start using my dividends to pay for things like bills, vacations, or to even help family and friends. So even though that's one of my main goals for now, and even though I love higher than average income producing assets, it still doesn't mean that I'm willing to invest into yield traps or high yielding dividend stocks and ETFs that not only are at risk for future dividend cuts, but higher yielding ETFs that decay over time on top of that. But in this video specifically, we're going to go over a brand new ETF that I just added to my long-term portfolio for the first time ever. And this ETF offers a ton of income because of a very unique strategy, offers a super high yield, much higher than average dividend paying stocks and ETFs across the market, and has upside potential at that. So if you want to see exactly which brand new position I added to my portfolio as of recently, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the brand new dividend paying ETF that I added just as of recently to my long-term portfolio is none other than ticker symbol ISPY, or the S&P 500 high income ETF. Now this ETF is brought to us by ProShares, which is a very familiar ETF provider, and it says right here why invest in ISPY. It says ISPY is powered by daily cover call strategy that offers. So wait just 1 second here. We're talking a daily cover call strategy. Most income producing ETFs sell calls in the monthly or even longer, but this is a daily cover call strategy, which means right away I see that there's a potential for a ton of income to be made if the management does things properly. It says high income potential, selling call options each day can produce a high level of income, which it definitely can. It says efficient income generation potential. Seek income and targets S&P 500 returns over the long term. And lastly, higher return potential. Seek to capture returns that monthly cover call strategies may sacrifice. So like I said a second ago, a lot of the cover call style, income style ETFs across the markets are using cover call strategies on a monthly time frame, but ISPY does daily cover calls, which again have the potential to make a ton more income. At least that's what it says. It then also says investment objective. ProShares S&P 500 high income ETF seeks investment results before fees and expenses that track the performance of the S&P 500 daily cover call index. This ETF gains exposure to the sale of daily call options using swap agreements and does not trade options. So also very important there, it uses swap agreements and does not trade options, so it's not necessarily going to be the same method as if you or I were to sell cover calls on a daily time frame using the SPY or something. Now a little bit more about this ETF, just so we're all on the same page here. It says the S&P 500 daily cover call index consists of long positions in the S&P 500 total return index and a short position in 1 day out of the money S&P 500 index call option. The option is sold daily, and the strike of the option is chosen as a function of the S&P 500 index and CBOE VIX index levels. The index aims to reflect higher income generation and have lower timing risk by using daily options as opposed to monthly options. So that is a good point. A lot of times when you're using monthly options, there's a big time frame, there's a lot that can happen, and there is in theory a little bit more control when you're talking daily options. At least is what they're hoping for. Now looking at some of the distributions from ISPY since inception, back in February, we saw a 48-cent distribution, a 31-cent back in March, then 31, 35, 31, and then as of recently, almost 45 cents. So it's probably going to depend on exactly how well the fund performs on a monthly basis. That's obviously how much you're going to get distributed as a shareholder. And this can definitely be a pro and a con. I tend to like funds like SPYI or like SVOL that tend to try to pay a consistent amount to investors, regardless of exactly how well the fund does during that time frame. But all in all, this is still a massive distribution, especially when I show you how much this ETF costs here in a second. Now remember, just a second ago, we saw that ISPY was paying anywhere from 31 cents to 45 cents on a monthly as far as dividends, distributions, whatever the case might be. That's a massive amount of income for an ETF that currently costs around $42 per share. So ISPY as of right now in the max time frame, and again, this ETF has only been trading for a little while, this ETF is up around 7% on the max time frame, which is pretty significant, especially because this does not include the massive dividends that this ProShares ETF has paid also. Not to mention this ETF's expense ratio is 0.55%, which I honestly think is pretty cheap considering how management intensive this ETF is. I mean, there's a lot of work that goes involved in this one, so I honestly thought this expense ratio was going to be higher. And although half a percentage more or less is pretty expensive, for this style of income ETF, I think that's more or less fair. Now, assets under management is just over 228 million, so this ETF is pretty small still. But if this ETF keeps performing how it has so far, I would not be surprised if it gets much larger even throughout the rest of this year. Now, so far, the strategy seems pretty sound, especially for those income-focused investors that are really looking to farm as much income on a consistent basis and a monthly basis. The daily cover call strategy is obviously a strategy that has the potential to do so. But besides all that, if we look at the performance and let the numbers talk for themselves, over the last 0.61 years, which take it with a grain of salt, this ETF is relatively brand new, ISPY has returned. Total return so far, 14.59%, and this is with a $10,000 investment and dividends reinvested, keep in mind. So around 15% total return, or if we annualize that out, around 24% so far at least. And again, things can change. This ETF is new. We're going to have to see how the market plays out, etc. But still, so far this ETF has returned a positive return throughout the entirety of this ETF, and it's even significantly higher than other income-focused ETFs across the markets. Now, this is obviously due to the fact that the market has been trading the way that it has been trading, and on top of that, this daily cover call strategy does have the potential to make a ton more income, again, if the market cooperates. Now, with dividends not being reinvested, this ETF still would have had a total return of around 14% and an annualized gain of around 23%. So either way, however you want to cut it, ISPY has done great, at least so far historically. Now, I'm aware that there's other ETFs out there that do daily call option strategies just like ISPY. ISPY's performance so far, I was more than happy to grab a share or two of ISPY just to start off a small position that I actually added to my portfolio as of today. Now, would I personally ever make ISPY, the S&P 500 high income ETF like this one, a large portion of my overall portfolio? Well, honestly, probably not a large portion of it, but having some of these alternative investments in the portfolio to help generate a ton more income, to help me reach the point and get closer and closer to my end all total monthly dividend goal, I don't think there's anything wrong with that whatsoever. And the great thing about investing in 2024 is that there's so many different ETFs across the market and income-focused ETFs at that all offer similar things, but all do it in their own way, which offers the potential to have exposure to so many different strategies with a single click of the button. I've also been grabbing other monthly paying dividend ETFs, things like SPOL, the Simplified Volatility Premium ETF, which is definitely worth looking into. On top of that, I'm a huge fan of DGRW, which is more of a dividend growth ETF that does pay monthly. Also, FEPI, the Rex, FANG, and Innovation Equity Premium Income ETF. FEPI is also worth looking into. And also, we can't forget things like the Global X S&P 500 Cover Call Style ETF, XYLD, and of course, QYLD that I own a ton of. But now lastly, most importantly, I want to hear from you guys down below. Is ISPY or any of these single day, daily cover call style ETFs interesting enough to you at this point to enter a spot in your portfolio? If so, let me know why or why not, and comment down below some ticker symbols that I should look into just like ISPY. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.